Welcome back to Market on Close. Let's talk some more volatility. This time it's in energy today. Crude oil with a little bit of a dip, finally. Let's bring in Alan Nuckman, he's Chief Market Strategist at Agora Financial. Alan, congratulations and welcome back. A new entrant into fatherhood, as I understand. Hey, glad to have you here. Let's talk some energy, all right? I know it's boring compared to all the other excitement that's going on, but crude, okay? Finally got a little bit of a dip in oil.
Yeah, it's not boring. It's been a 50% rally off the lows, here so far in 2019. So there's been some great opportunity there, and I think it's a good, healthy barometer of that global growth worry is not, what it's panned out to be. So if we're talking about what's happened in crude oil, it's like the market today. It's a slight step back session. And we've seen this time and time again. Now, talking about crude oil, obviously, we've blasted above that 60 level that I've talked about with you many, many times, weeks and weeks and months ago. That's the halfway point of that drop from the top. So that acted as a cap. Now it should be a support level. I don't know if we're going to go back all the way down there and test it, but you've got to appreciate what OPEC's been able to do as far as production goes. I don't think it's that easy to keep a cartel together anymore like it was in the 70s, but they've been able to do what they needed to do to get the price to where it is right now.
All right, so you're talking like the technical retracement type situation here. So just outline that to me again. Basically the halfway climb based on how much it fell?
Right, from that drop down to those $40. $42 lows. The $60 level was the halfway point. Now, what's important in crude is that typically, once you get above that halfway point, you often get a full V recovery, all right? That's what's happened in stocks. Stocks did that, and they got to that halfway point back in the middle of January. And guess what? We're closing in on a full V recovery, as we've done every time in history. So let's go back to the stock market, because the crude market and the stock market are very much correlated in their price action. 2014, 2015, 2016, the stock market had a 15% sell-off, and each and every time it had a full V recovery and then made some new higher highs. So it looks like that's going to happen in stocks once again. So that could very much come true in crude oil again. 70 is the next psychological resistance, but we've been stair-stepping higher each and every, almost each and every session, it seems like, over the last few weeks.
All right. So then is there just a natural kind of break then from this? I know that we had a little bit of a build for the inventories. We had an International Energy Agency with a report that kind of seemed like more of the same, basically, Alan. Do you tie any specific news catalyst to this, or is this just a needed breath?
Well, I think it just doesn't matter. And we saw that last week when he had that huge build and it did nothing to the price. We made some new relative highs once again. We're just talking about macro momentum. Let's look at the stock market. Again, they're very tied together. If you look at the stock market, almost every week when we talk, we're talking about a new relative high on a weekly basis. So that's happened each and every week. It's a march continuing higher until something changes. That's the path of least resistance, is continuing this upward move. Now, we talked Valero before to keep this on energy. Valero got stuck trading, sideways here, and now it looks like it's trying to break out of this top. It had been trading between, I think, 80 and 90 with an 85 midpoint that we leaned on, and using an option strategy. It's had a very healthy payoff here in the last week or so, and it looks like Valero's trying to move after trading sideways for 2 months.
Hey, but this isn't the only energy name you're trading, right? You got a solar trade. Sunshine.
I'm a sunshine man. Okay, if you're looking at that space, think about it. If energy prices continue to move, that's going to help out that whole space as competition will get more valued. So let's look at Canadian Solar. Canadian Solar is interesting in the fact that it had traded between 10 and 20 for 3 full years. It broke out, it rallied to 25. Now, it's giving us a second chance entry now that it's come back down. Markets often come back to their breakouts, if you want to get into technicals, which I know you like as much as I do, that it's hovering now below, that $19 level. So what I'm looking at is another second chance. Now, this is a stock, like I said, that did have a breakout. It's come back. I'm looking at the $15 calls for January. January gives me plenty of time, takes that out of the equation. The January $15 calls, which are at the money about $4, that option is going to cost about $5.
Yeah.
So it's a low dollar risk way to put a chip
You got it, Alan Nuckman. And yes, you're right. I've become a believer. I'm a technical guy now, though. You know, I like both worlds, Alan. You keep on your side.
Keep bringing me the news. You bring me the news, I'll give you the technicals.
All right, you got it. Mr. Nuckman is the Chief Market Strategist at Agora Financial. Always fun. All right, we'll be right back. Time for the closers panel. We got a portfolio manager.